Hello, and welcome to the Banker's Tech Talk video series, looking at all things fintech. You can watch previous episodes on thebanker.com/tech talks. I'm Joy Macknight, managing editor of The Banker, and I'm joined by Keith Pritchard, who's managing partner and chief pragmatist of Quorsus, which is a management consultancy company specializing in financial services. Thanks for joining me, Keith.
Hi, Joy. Thank you for the opportunity of talking today.
So how does Quorsus work with Tier 1 banks and market utilities to address the regulatory requirements, especially in post-trade reporting?
So within Quorsus, we've got people with a variety of skills across the financial services domain. So from people like myself, so I have 30 plus years experience building and delivering technology, to people who've spent their careers running operational groups, to people who are detailed reg specialists who can tell you about the latest nuances of SFTR reporting, through to people who spent their careers delivering programs of change within a consulting framework. So we aim to work with our clients to bring that sort of holistic view to a problem. So not just address the symptom, but work with our clients to hopefully understand the root cause and help, therefore, get a more long-term sustainable solution. And as you said, we work not only with individual clients, individual banks, but through Quorsus and in our previous organizations we've all worked for, we've helped drive industry initiatives forward through working with members of the financial market infrastructure, clearing houses, fintech organizations and industry bodies such as ISDA and the BBA.
And so what would you say are sort of the main pain points in regulations, being compliant with regulations today?
So I think the obvious answer would be the volume of change, but that really has been a constant over the last number of years, probably since 2008. I think there are some uniquenesses about the current environment, and particularly I'd say around the interrelatedness of the change that's happening. So, for example, the uncleared margin rules, which are affecting a large number of organizations over this summer, might drive organizations to do more swaps financing transactions. That would then get them caught up with the SFTR, the swap financing transactions reporting. And also, if they're doing more margin calls, might get them trading more securities, which would get them caught up in the new security settlement regulations coming in as part of CSDR. And so the fact that there are all these large programs of change going on, but they are all interrelated, is an extra level of complexity. I think there's also another slight uniqueness, which is in the past, many regulatory changes have simply been asking for more data or for an extra report in reaction to a new event. But some of the regulations that are coming in now are requiring new business processes. For example, the swaps financing transaction reporting rules. Lots of organizations are implementing completely new upfront matching processes using new technologies. So I've had to create new organizational groups, implement new processes. And actually, quite often, those things are more complex than a pure technology change.
And how would you say that the COVID-19 pandemic has impacted the regulatory environment?
Well, again, the obvious thing would be to point to some of the delays that have happened. So some of the regulatory deadlines have been pushed back. But there have been some subtler impacts. For example, with the swaps financing transaction reporting regulations, there are two waves of it. So some of the larger organizations are going live in wave 1 and some of the smaller in wave 2. And the regulator put a 3-month delay between the two waves, with the idea being that lots of the issues will be resolved after the first wave went live, so that when some of the small organizations went live, the markets would have settled down a little bit. What has happened is that the first wave has been pushed back by 2 months, but not the second wave. So we now do not have that gap. There's not enough time to learn any lessons from the first wave. So I think it's going to be a lot more complexity and a lot messier when that particular regulation goes live. Another example would be with the security settlement regulations within CSDR, which were originally intended to go live this year, and because of the COVID-19 have been pushed back to next year. Now, unfortunately, that's taken them from being before Brexit to after Brexit. And recently, the UK government announced that they would not be implementing these new security settlements regulations. So now large organizations are not only faced with project dates moving, but suddenly there's a whole change, a whole part of their business may not need to be governed by the same regulations. So there's just complexity upon complexity, moving dates and changing populations impacted.
Excellent. Well, thank you so much for joining me this week, Keith.
Okay, thank you, Joy. It was a pleasure.